All right, guys, welcome back. Another episode of Chart Talk. It is the 24th. We got a shortened week with Thanksgiving on a Thursday. Market will be closed, and then we have a little bit of a half day on Friday. So again, today we walked into quite a bit of a nice little gap up and a nice little rally off the open today in a lot of the key sectors. Now, it does seem like we've seen some overall weakness for the past couple weeks. Again, there's this baby breakdown stage that we've seen in a lot of the indexes. Again, you can see it here in the Qs. So again, this action today has been great. Again, last week, Thursday was, pretty rough reversal type day. You had NVIDIA gapping up from their earnings and then quickly selling off, and pretty much the indexes followed suit with what NVIDIA was doing. And we're getting a little snapback today, but this overall mini breakdown stage is still intact. So we should expect some sellers to come in when we get to the resistance area like 615 in the Qs. Pretty much same thing here in the S&P. Again, we have this broader, flag forming, but we've continued to see this test of this 650 area. And we finally saw a little shakeout on Friday, and we've snapped back off that, which is great. And now we'll see if we continue to flag out here, or if we get similar action like we saw in the Qs, or it's just this kind of, broad, little breakdown stage. So it does seem like we're going to eventually see a break of this 650. Just seems like this is a matter of time. Again, the key thing here, if we're not going to see this break, is we need to see a new pivot high form, pretty much this week. We need to see a break above this resistance area. If we do get this break and we can climb, back up and retest the 690, then, we're just in a broad topping pattern and, we're just gonna be flagging out. But if this area acts as resistance this week, and we get another fall through day tomorrow, this area starts to act as resistance. And instead of that push higher to 690, we start to roll back over back to this 650, then expect that breakdown lower and probably get that move to the 200 day. So, again, when we get a big uptick like this, it's very easy to be very bullish, but we've been seeing some clues here, on Thursday, back in October. These are definitely some distribution type days here. And when you start to see that, you can almost see like a mini head and shoulders. Typically, there's going to be some reversion to the mean, which again, if we did break 650, we pull into the 200 day, that'd be a technical correction. Again, corrections happen typically once a year. If we get this one out of the way, then it clears the path for that climb back to highs. That's pretty much, best case scenario. We have that run back to 690 in the short term, when in reality, we probably need to test this 200 day or get close to it before the market's really going to be ready to get there. So it looks like it's, 2-3 more days of, upward price movement to get there, but this is going to be a key area. So a little bit of caution. Again, there's definitely still some individual names that are setting up over the weekend. Most of the individual names looked a little bit stronger than what we've seen over the past couple of months. Again, the past few months, the FANG names have really pushed the market higher, and we've seen the indexes rise because of that, where a lot of the individual names looked a little bit weaker. Where lately, we're seeing some weakness from the NVIDIAs of the world, but Google's still breaking all-time highs, Apple's still setting up. So it's kind of a mixed bag in the FANG space, but there definitely is still some other setups in some of the less popular names. Again, gold, still just in this broad range here. It's kind of fallen off the map of people's interest in it after putting that high at around 4,000 an ounce. So now it's kind of just consolidating like it did, back last year through that 3,000 area. 10-year, still bear flagging. For those looking for rates to drop, when we see this break of 390 in the 10-year, expect to see that drift lower. But for now, just basing out. On the flip side, we have the 10-year rate basing out in more of a bear flag, where we're expecting a break lower, where the dollar has been basing out and looking like it's going to break out higher. So Again, weak dollar, good for stocks. Strong dollar, very broadly, bad for stocks. Again, if this was a tradable stock, we'd be looking to be buying above this 100 versus 99 here. But it's the US dollar. It's basing out very strong. We're seeing a lot of higher pivot lows recently, and it does seem like the dollar is probably going to push higher out of this base, which could add some weakness into the US equities. Again, puts call ratio, nothing to really talk about yet. And VIX still fading with today's action today. Really, the big clue will be when VIX breaks over the 30 area. That's kind of the time to take note or be cautious. And really, like we've seen the last few times during major market bottoms, when you see a VIX up at 50 or 60, often time to buy. So semis, again, been very strong this past 6 months or so have increased, nearly doubled. But in the last month or so, they've started to pull back in again. You can see this very tight breakdown stage, and you can just see the arrow pretty much pointing to the retest of this 200-day. So again, very strong snapback move today from the move on Friday, but we want to see this area break. And when you see breakdown stages, typically you don't get a sharp break and a run back to highs. You need to see the base form and then the next run up. I'm trying to visually show like in the chart, like you need that base to form and then that climb. You don't really get the sharp break and it just, B bombs right back to highs. Now, healthcare, again, we had a big focus on this sector earlier in the year when it was somewhat hated, back in the summertime and it was basing out here. Again, like we were talking about the dollar before, this base broke out, very strongly, and it is now retesting the prior all-time high. So back in September 2024, it was at all-time highs, pulls all the way in, and it's now finally retesting this high, which the first time you have a major retest often met resistance. So one of our big picture alerts from a few weeks ago was just Regeneron, and in the healthcare space, in the pharma space, nice earnings flag breakout. We've had this target of 800, but now we're seeing this sector retesting all-time highs, and this is just time to protect those profits. Nearly up 100 points in the name on $10 risk. 10-to-1 risk reward. This is not the time to give this thing a ton of room. If you get a break below low a day, this could be the time to take some off the table, given the run that this sector has been on. Again, biotechs as well, pretty much same story here. Both these sectors pretty much lagged in the overall rally that the market's been in since May. Again, tech, financials, consumer discretionaries, consumer staples, all these sectors have already hit new all-time highs months ago. And healthcare and biotechs are pretty much playing catch up. And they're, again, rallying now, kind of late in the game, but still working their way back to these all-time high retests. So healthcare is a little bit ahead. Biotech's playing catch up. But again, expect resistance to come in this area. Anyone who's buying health, biotechs for the last couple of years, you bought it back in 2021, you're finally almost back to even. So definitely expect some sellers to come in there, just like we're starting to see on a very small scale in the healthcare sector. Now, again, most of the other sectors, it's pretty much the same story. Most of the sectors that we see are setting up. We have consumer discretionaries setting up for this blue sky breakout in time as it pulls in. But the recurring theme with a lot of these sectors really is just this mini breakdown stage that we're seeing. So I'll switch back to a daily. Again, it's a very slow pull, and it's not like a very scary or aggressive pullback. But this is the overall breakdown stage that we're seeing, and this is where you want to be taking profits into resistance or avoiding the sector, kind of full stop. And we're seeing the same thing in telecom. Again, not as drastic as a drop as we saw back during the beginning of the year. Again, the tariff wars, you can see is a very steep, aggressive breakdown stage where for telecom up here at highs, it's not as aggressive. It's more just a flag here. So we're seeing that with some of the other key sectors where it's kind of choppy, but it's just pausing. It's not this dramatic breakdown like we saw in the beginning of the year, just a slower pullback from just digesting the major run up that we've seen. So we're seeing that, in utilities, we're seeing that and a couple of the key sectors as well. Now, some to avoid. Consumer staples still seems to be an avoid. Very clear higher lows continue to form with each pretty much subsequent bounce in the sector. It does seem for the consumer staple sector really just an avoid until we get that test, the 200-day. As we've seen the last few times, that was really the time to buy the sector. For now, it's just been an avoid. Same thing with materials, just like we were showing with tech and semis, just in this, broad breakdown stage. Just need to avoid it and let that base form, which it hasn't done yet. Same thing with financials. Again, we can see the same breakdown in the beginning of the year. We're seeing the same breakdown again. And eventually it breaks, but it just needs more time to develop and really break this level with some momentum, which it, tried breaking a few weeks ago, snap right back lower, pretty much just, a broad H pattern where we should expect lower price action financials before we see any retest of those prior highs. So again, moving on to some names. Again, this Tesla has been, probably a little bit frustrating, but again, we did see some momentum getting pulled out of the, high beta names last week. Beginning of the month, Tesla through 470 looked phenomenal, had that break of support. And now the new key area really is kind of this 380 area. We've gotten this like little mini kind of double bottom here. 200-day continues to catch up and subtly act as support. But now we have what was support acting as resistance in Tesla. We really need to see that break of this like 430 area and then get back up to the 470 area. So for now, we had this trade on for many months now, not a couple months, through this 360, and we had that break even stop this entire time. With this recent break and this double bottom here at 380, if it breaks 380 to the downside, it's going to get back to our price of 360. It's just, that's where it's going to go. So at this point, been in it for many months, was up nearly 30% in the name. Can't really turn this into a break-even trade here at 360 if it's going to come back there. So if this breaks this 380, we'll take 20-point win, let it shake out, and circle back to it. If this area can hold and break 430, amazing, great for us. And then we have to just wait for that 470 breakout down the road. So close point of where we could potentially get stopped out, maybe even shaken out before it's really ready. But we got to just take it, day by day. Friday looked horrible. Looked like we're going to get stopped out today. And today we have a nice market bounce and we live to fight another day in this swing. So we'll see how that goes. Again, this MEDP, we had an alert in this name back in August on this little break of this little pull-in after earnings. And we saw this very nice grind higher over the next quarter. And again, gaps on earnings again. And we see the same exact pattern forming in the name. Exactly as it formed here is exactly how we're seeing it form again. So we bought some today through that 606, keeping a very tight stop versus the low a day. And we'll just see if it's going to kind of repeat this kind of breakout and drift higher trend that it did in summertime. We'll see how that goes. Again, for now, pretty tight risk in this trade, and we'll see how this one goes. A couple names on the radar. Again, this Apple, we talk about the kind of the mixed bag in the FANG names. Apple here gaps up on earnings right here. Kind of bearish engulfing. Again, not the biggest deal. Is at all-time highs. Pulls in, flags out, and has been trading in this pretty tight range, even with the overall weakness we've seen from the major markets and from the tech sector. Now, what's interesting with Apple is when the tech sector was super strong earlier in the year, Apple kind of lagged, and then it finally played some catch up. So it is nice to see Apple flagging out here, very tight range, very easy setup for us as swing traders. And we look to buy 278, stop low 265, risk in $12 in the name, and kind of have that target at $300 or higher. And Google's showing us that very realistically is in the cards, just given where Google's been trading at. So we have this all-time high breakout for Google, breaks out here, We got another setup in Google. Let me delete some of these arrows. So all-time high breakout, super expensive, breaks out to new all-time highs. Flags out again, just like we're seeing with Apple currently. Flags out, you buy through all-time highs, breaks out again. Then we get another flag in Google again, flags out, breaks out, new all-time highs again. So these new all-time high trades, Google is showing us multiple attempts where you just simply bought the new all-time high and you got rewarded. So we saw this 3 times in a row with Google. We're now seeing this set up with Apple. It's really just started to get above its new all-time highs. This was all-time highs. Let's look back at Google. This was Google's all-time high break. So Google has gone up nearly 100 points since September when it got the most expensive it ever was. This was the most expensive Google ever was, and it's now 100 points higher. What took Google, 6 months of price action to move $100 or, $60, it's moved twice that in a fraction of the time. This is why we focus on expensive names through all-time highs. Took Google again 6 months to go 60 points to grind back to highs. Once it clears those highs, $100 plus higher in 2 months. 30% move in 2 months once it cleared all-time highs. So this is something where with Apple, it looks very early on. It's just started to break all-time highs. Super tight flag here. Can't even retest the prior all-time high. This is showing maybe Apple wants to play catch up, the same thing Google did, and maybe there is that parabolic move in Apple. But for us, all we care about is the entry to 278. And if we get that, stop below 265 and just be patient with it. So keeping a close eye on that one. There's Intuit, another one to keep on the radar. Again, just seeing this base here. Again, technically, you can say this is a bear flag, but nice base here. Can't really break this 640 area. Also can't break 680. So if you do like to short, nothing wrong with trying to short this down through those lows. But for myself, I'm looking at this more to buy through this 680 area. So keep it on the radar. Not as good as the Apple setup, but one to keep on the radar nonetheless. Next up, just some good and bad trade. Last week, we bought this BSX. Just a little support buyback trade. We bought it as it pulled into support. Ran back up into this prior pivot high. At the time, we were looking for this run up to this blue sky breakout area. We didn't get it. Sellers kind of held the area there. Pulls back in. We took the trade here, and it has since came back and is trading below our cost basis. So this is a key reason why we like to raise these sell stops on the way up to keep us in this trade. So we buy it through 100, and then as each day closes, we keep raising that stop up until we get stopped out, and that helps us avoid giving the trade back to break even for a loss. And this is something where with Tesla, given that it's finally starting to, or has started to, come back to prices that are near our cost basis, we don't want this to turn into a trade where it breaks this and is back at our price or lower, and we stubbornly turned a nice winner into a loser or break-even trade. So this is why we're, after, 3 months now, we're finally raising the stop to protect this trade if it's going to fail. Of course, we want it to work, but if it does fail, we'll at least still make something versus nothing. Another good and bad trade from last week was this CACI. Again, we were buying this breakout. This was a blue sky breakout to all-time highs. Again, this was when the market was pretty weak last week, but this name was still breaking out. We did get about a 20-point move in the name, but a little bit of a thinner name, pretty wide. Once it came back to our price, given the market weakness, it made sense to take this off break even. Again, still trading above that level, but name won 20 bucks in our favor, pulled back 15. We're very happy with that break-even trade. So still setting up, but again, a little bit of a thinner name and keep it on the radar, but nothing with that name just yet. Again, Regeneron, we talked about before, one of our big picture alerts through this 660 area. It's broken out very nicely again, like we talked about BSX, that target was that 108 area. The Regeneron target has been this 800. But after this run up, again, 100-point move very quickly, very easily. Definitely could make sense to have a stop below the low a day here or prior low a day. Kind of tough to give this, the real out right now is versus 700. Tough to give it back 60 points, but a little low a day stop or prior low a day stop definitely could make sense if you're still in this name. Another alert, another big picture alert from last week was this CBRE back up through this support buyback of this 156, 155 area. So just grinding higher today. Again, nice to see the price action, but really the target is this 166 in the short term. So nothing to really change just yet. Can raise that stop to maybe break even or prior low day. For now, it looks pretty good. So moving on to the last couple quick names to go over. Again, we've been talking about this Netflix split, and you always want to avoid names once they split. So this blue line is the day that Netflix did the 1-for-10 split. They were $1,100 a share. Now they're 100. If you own the stock before, you had 1 share, now you have 10. Nothing really changes. But when these things happen, it's typically after the name has gone on a substantial run up, and they need to make the stock appear cheaper for retail investors to come in. So it's typically a sell the event thing that occurs. Again, we can see Netflix is up nearly 1,000%, give or take, 800% or so from the 2022 lows. This is the time where they split the stock. Makes sense for Netflix to split it, but as a short-term trader, you do not want to be chasing the split. Again, already down the equivalent of 60 points or so, or $6 post-split. So give this name another month or so, avoid it during the split, and circle back to it later. Again, energy names have been setting up, pretty decently. We have this very big breakout level setting up in FANG through this 150. Again, tried it the last 2 weeks or so. We are finally starting to see these buyers step up here in this like 142 area, which is nice to see. Again, very big pattern. 200-day is still acting a little bit like resistance. Just give it some time. But through this 150, looks very good for at least to move back to this 180, in the coming months. So keep a close eye on FANG. NVIDIA, again, had a big earnings last week. That was pretty much kind of the talk of the market, was what NVIDIA was going to do. But again, given how much this name has gone up this year, it's up nearly 100% since the April lows. Even with them knocking out of the park, it's it's expected for NVIDIA to beat earnings. So it's not going to be this dramatic move, which we were talking about last week. You need to expect it to stay within this range, this 212 to 165 area of support. You have to just expect it to trade in this range for the foreseeable future. Now, back in January, at the beginning of the year, NVIDIA was doing pretty much the same thing, kind of flagging out at highs, looked great. But when it does pull in and breaks the 200-day, this was a 50% pullback from all-time highs. So if this name continues to put in lower pivot highs, meaning it's okay, this is all-time highs, this is the earnings gap up, and it can't trade above this area or this area, and continues to form lower highs, and we do break this 160, which would be pretty much where the 200 days hovering over, we do get that break. There's no reason why this name can't also repeat that same pull-in. And everyone loves any stock when it's at all-time highs. Think of even names like Oklo. When it was at 200, people were talking about going to 400. Now it's back 50% off highs, touching 200-day. No one's really talking about Oklo. So not really saying NVIDIA is going to have as drastic of a drop. NVIDIA is one of the biggest companies in the market. But once these things get weak and that sentiment changes, you don't really want to be the one buying 160 on the way down. That's when when that happens, it's rolling over much lower. So we starting to see some of that weakness. Even AMD, had that big gap up, and you don't really want to see these things starting to test support. And the fact that it shook it out, this is the new range in AMD, but same thing like NVIDIA. If this bounce can't get back up and trade within this range, you get up into this 260 area, and you get a bounce to say 240, and you now start to get a new lower high forming, then it just spells the not if, but when this is going to break this 200 again. So this is, we're getting some very key areas of when to exit these names. So for Tesla, 380. Tesla breaks 380. That trade through 360 when Elon was getting in is over. If AMD gets back down to 200, this trade is less likely to trade higher. NVIDIA, this thing starts to get back down to this 160 area and break lower, avoid these names for quite some time. Now, this Amazon, we're talking about some of the FANG names, Meta, big avoid, has a little bounce today. We see the breakdown stage. See this current breakdown stage even breaking below. I'm going to kind of draw this line out to here. So, Meta is an avoid, but, Netflix is an avoid. Amazon and Apple don't look that half bad. Apple probably is the best among them. Again, Google, you really have to be in it already. But this Amazon also setting up here. Again, all-time high gap up. We get that fade back into the range. Good to see. Amazon pulls into the 200-day, immediately bounces off of it. So we know kind of this 210 area for now is the key exit. If Amazon's trade is dead, it's gonna start to die below 210. Stays above it, pushes back through this 230. You get to run back to 260. All good in the world. So nice flag here, pulled back in, right at 200-day. Amazon through 230, move back to 260. Definitely makes sense. But this Apple, definitely best chart out there right now in the FANG space. And the Netflix and the Metas, definitely avoid those. So again, we have a shortened week this week. Have a happy Thanksgiving. Markets close Thursday, half a day on Friday. Expect some quiet action. And the key thing really is expect to see, the resistance come in. Even if we get some follow through tomorrow into Wednesday, expect to see some resistance at this 680 area in the S&P. So if we can clear that, again, it's a chip shot back to highs, but if this area continues to act as resistance, just a matter of time before we get that retest of the 200-day and get that technical correction. So hopefully this was helpful. And if you found this helpful, drop a thumbs up, and we'll see you next week.